Good morning, everyone. It's a blustery day here in Vancouver. Blustery markets. It's rebounding. It's volatile. It's down. It's up. Stocks are going up, down, sideways, as we used to say at Merrill Lynch. What's the market doing today? It's going up and down and sideways. Like, what? What?
So
that's what we're facing right now. It does. It goes up and down. It goes sideways. It does it all throughout the day. And that's kind of, I guess, in a cute kind of way, that's kind of the theme we're going to talk about, because when you're looking at a model and you're looking at a company, you're talking time frame as well. So at any given time frame, what's my time frame at this? Like, well, if you're matching it right today, what's the price of the stock? Here's my gain.
Yeah.
So your time frame and your news flow and everything else makes a huge difference, because it's part of the criteria when you're evaluating: are you hitting milestones? Are you not hitting milestones? You know, what's your rate of return as of that time period? These are critical. And that has to be a constant theme that one looks on, because it's more than just a nuance. You need to know what time frame you're looking at. And for us, we look at years. So we avoid a lot of the minutia, because we invest in management teams and projects that are sound, that have a lot of factors that need to be worked on over time. And Desert Mountain Energy is a perfect example to kind of highlight the video we just put out, where we had Robert on talk about what he can talk about. And we have to leave some things out, and to reiterate some of the points that, listen, there's disappointment that they didn't hit the numbers. Here's the upside. Will it put plans a bit not on hold? No, they're not on hold. Will the time frame extend? It could, and it's not a cop-out to say, right now there are supply chain issues. If you were to say to anyone in the resource sector, tell me what date your assays will be done by, they'd be insane if they told you. Because if they tell you, you're going to come back and get pissed off because it's not on time. It doesn't matter if it was the lab that held off. You told me it was going to be May 24th, and now we're into August. You're setting yourself up for failure. So, and we laugh about it because we're used to it. And I say, hey, when do you think you might have assays? And it isn't that people are being cute or that they just don't know. They can't control things that are out of their control. No. You can't control the fact that people are not going to work, which is an incredible, amazing thing to have to say. No. So when you're trying to factor in these things, this is what a business has to do. And often as investors or people who are playing the market, and especially now playing commodities and looking at things, they're not looking at the business as a whole. They might be just reacting to news. They might have different models than certainly you and I, and none are right or wrong. They're just the ones they're using.
Yeah, and I mean, I made the analogy to you when we kind of were discussing this of think of it in the context of studying for school or for university, right? Everyone's got different ways that they learn and understand things. You got some people are visual learners. Some people need to, like, if it's a math equation, they just need to sit down and go through the problem. Some other people need, hey, I'm going to walk you through 20 of these before you go and do it. There's different approaches to getting the same result. So when you're looking at investing as well, you can get, we can all say, hey, my end result is I want to see my portfolio grow by 20% this year. Great, that's a great goal. But how you get there and the path that you do that it's different, and it can change from person to person, not making anything right or wrong. But our specific model might be different to someone who says, well, I follow the company. There's going to be news coming out. There's going to be this. It'll trade really nicely. I'll get up, the stock will go up 50% and I'll sell it and get out. Cool. Like that's one way to do it. But a way that I think is a lot cooler, and the way that we enjoy doing things, is to actually get involved with exciting stories, companies that are solving problems, and building that company, watching it grow, and being along for the ride. And the ups and downs of having the good days and the bad days comes along with that. But it makes it a little bit more exciting too.
It's a long time frame. And I'm making this comparison, not saying that we're like Warren Buffett or not, but Warren Buffett would buy companies for cash flow for very long periods of time. He was interested in decades. He's not interested in your hourly trade. So whenever negative hourly news might come out, unless it's like literally life-changing, no, it's not going to change his outlook. They anticipate a lot of these ups and downs. You can't be correct. Your assumptions aren't always going to be correct, but that's just part of his model.
Mm-hmm.
A swing trader or a Forex trader or an options or derivatives trader who's literally looking minute to minute at screens all day long, they don't care a week from now, a year from now, 10 years from now. That's not relevant to them. They're trading on information right now. To information that I would say is noise. It's not relevant to me, but it is relevant to them. And if you have enough of a market that says the temperature is 2 degrees lower today in XYZ, and you think that has an effect, then it has an effect because it's going to be reflected in the market. So it's just reminding people, choose how you want to invest. And I make a distinction because it's more a classical way of, if you're investing in a company and in a business, which is what we like to do, we're not trading stocks in the stock market. We look at the management team as being the critical and core component, because I'm not there to work on daily projections, assumptions. The price is going to be at this for crude helium. It's going to be at this for, at this. And if you get into that nuance game right now, which I said to people in the interview, and I've reached out to people and they've sent me their thoughts on what each well could or might be. There's like 30 assumptions you have to go through, of which we don't have all the details yet on. That it's a no-win solution, because you're just playing a game of, it could be this, it could be that. Yes, projections are down because it's 1.1. Okay, yeah, but it's something that someone else might enjoy to do, and I've done that in the past with all sorts of projects when I was at Merrill. And you'd go into the nuance and the minutia of maybe it's this, maybe it's that. Well, one's if we change this parameter, and it's not that that's not useful. It's just it's not useful for the way we look at things, because you can get information overload. And there are some people who are true analysts that really are into it and would have, I would say, yeah, that's their model. Go for it. Keep doing it. For us, it isn't. There's going to be issues that pop up that a company doesn't have to tell you. They don't have to tell you that their supply chain things report XYZ. They have to report certain things, but you've entrusted the company to the management. You've either invested directly into the company, so you're a shareholder invested in the company, or you've bought it in the market and you're hoping it goes up and down in the market. Those are two different things as well. One's an investor in the stock market, one's an investor in the company, and we're investors in the company that we say our time frame is longer. There's going to be problems sometime. Every company has. There's going to be, you're going to miss a hole, and Robert's talked about it before. You're going to drill, you're going to miss. It's wild. They're going to be wildcatting. They may not be wildcatting. They're drilling. They've done all the work right now. They're going to be doing, step outs to further define things, and we'll see how those go. But playing too much around on the hypothetical of what could be, what could not be coming out of the ground. Yeah, it's interesting. But let me tell you how wide some of the models I've gotten, to exceptionally high still, to absurdly low, where I just think, well, what variables were you using? And then you get into that. Well, you can spend a week arguing, well, I don't agree with that variable, and I don't agree with that, and I don't think price will be there, and I don't think this, and that's not even a fun argument for us, because you're not dealing with reality, you're dealing with maybes. And until we have more data, you keep on pursuing.
Well, and maybes and hypotheticals that affect maybes and hypotheticals, right? Like it's not even like this one detail is going to change and it's going to mean this. No, that detail is going to change and have an effect on X, which is going to have an effect on Y. It's a giant, massive equation, right? Rather than kind of stripping that down into core fundamental pieces of that equation that, okay, if this changes over here, I know my constants are still in place, and I believe that we're going to get to this same end result.
Yeah. And and it's time frame, because someone would be very right in saying, well, I'm selling my position a couple of days ago because the release wasn't what I was hoping and expected. Yeah. Well, then that's your model. I can't say that's a bad I can't say, well, that's a bad idea, because that isn't even logical, because I don't know what their model is. They might look and go, I was expecting 8% and this, and my model told me this number, and it should have been at 7, whatever. I don't know what your model is. So yeah, you should sell and you're not wrong. But for us, it's no, it isn't, because I've got a longer time frame. I'm not into, I don't want to watch news every second to maximize and pivot. Oh, hey, we got to get out this and pivot to the next company, and then we got to get that. That could work for someone. It doesn't work for me, because you're going to be easily at the whims of the market and the news. Just like if you ignored a lot of the general news that's out there, that's just candy pop, it's just noise, you're going to be terribly terrified of lots of things you don't need to be, because they're talking about nuances of things that aren't really relevant. And we'll touch on this very briefly, but they've changed the metric, say, on different illnesses out there to mean we look at a serious issue as being someone who's being hospitalized for something. That's a completely irrelevant stat to even look at, because why were they hospitalized? And say for right now, we know 50 to 70% of people in the U.S. were hospitalized for very mild to asymptomatic symptoms. So that's interesting. So that is only interesting to go, that metric of looking at hospitalization rates is meaningless. But this is the nuance one can get into if you look too much at data, you look at maybe this, maybe that, and you pay too much attention to pop news. Yeah. And unfortunately, and I'll say it the same as you get for mainstream news, politics, and it's not even politics, it's social issues. It's not even actual politics as you talk about international politics. We're not talking about theories and whatnot. We're talking just about social issues. The mainstream news is the same as the stock market. You can watch that thing and they'll come up with the strangest, oh, this went down because of this. Like, really? Yeah. But if you believe it, then it did. And that's fine. You can have that model. And there are enough people that are playing it that it becomes reality. I mean, the truth becomes reality very quickly. And that's why we step away from that to keep away from a lot of the noise. It's not relevant, and a longer time frame to go, yes, and I wanted to have this conversation because you're seeing more people talk about, oh my God, the equity markets are going to blow up. There's going to be this, there's going to be that. It's like, yeah, there should be for a lot of equity stocks. It definitely should. There's tons of overvalued companies that are just, I'm not interested in. But that means that there's tons of opportunities in companies that are building real businesses early stage. There's, and once I'm not picking on Tesla. Tesla's amazing. Elon Musk is a genius. Do I want to pay that for the stock? Absolutely not. No. But I would rather find someone else that's doing very interesting work in maybe the same spot like GMG. They're doing amazing things with batteries that no one really knows about. And there could be a huge upside. Yeah. And I like the team. The team's, we look at the team. We look at, can they manage problems when they come up? Yeah, they can. Can Desert Mountain Energy manage when issues pop up in supply chain and this and that? Yeah, they're very competent. They've got tons of experience. And I leave it to them. That's part of investing in a company. I leave it to them because I entrusted them with the investment. And, and whether you're BlackRock, where you literally have someone on the board who is reporting back and speaking on your behalf, or you just have $1,000 in it. It's like, no, I have to remind myself there's a long-term plan here. Are we off a little bit? Yeah, we're off a bit. But do you want to exit? And why are you exiting? And if it's that you're totally disillusioned with the entire thing, then yeah, you got to get out of it. Move on to find another company. If it's that you're disappointed, sometimes you don't need to react and go, disappointed that it didn't hit. Let's see what we're like in a couple months. My time frame isn't months. It just isn't. A lot of people it is. And that's not right or wrong. That's their model. Exactly. So, when I see people, they get upset. They say, well, I'm this and this. I said, yeah, you should sell. You're not wrong. Your model is telling you should. And that's right. But for me, and for what we look at what we do, and a longer time frame, I don't feel like I'm going to be wrong. I mean, I might, and I'd be more than happy to admit it if it happens. But right now, I'm more confident moving forward, in the long-term strategy. So I wanted to highlight that because we talk about the model quite often. And when it gets tested, like your emotions get tested, like, oh my God, it dropped. It's tempting to pick apart and go, look, let's find all the negatives and let's read all these forums, which some are accurate, some are crazy. And you just have to kind of reach out to find people that remind you, why were you in this in the first place? Yeah. And if it was, I just wanted to get a rate of return. Well, that's not a great model. Or I was just momentum trading. I can't speak to that. I mean, you'd have to find someone that does that kind of trading and ask them what they think of that swing trade or whatever it is. Yeah. For us, it's we invest in companies, we invest in projects, we invest in management teams, and we entrust them to find solutions, which they've done along the way. And a lot of these companies that we're following.
Yeah, and you know what? This kind of ties in really nicely. If I can get Adam to bring this up, Jesse had a question for us, and it
Oh
kind of
yeah,
ties in perfectly into what we're talking about here. He said, other than the earnings report, what do you think needs to happen for QU? So
yeah,
much deals and good news, but stock drops even after the Times of India deal. This is a great question, and I think it fits perfectly. I'll let you go first,
yes.
Andrew, and then I'll kind of give my thoughts on this as well.
I'll give my 2 cents. My gut check thing is that sometimes you've got news and news and news, and it looks great. We've got a new show. We've got this. We've got that. We've got this deal. People start getting antsy, like, nah, we just want to see numbers.
Yeah.
And you can get excited about as an owner or someone, especially if you're in media. And these guys they've worked at big movie studios and all that, and they go, oh my God, this will be a great show. Because once again, they have to think of right now in the stock price. They don't discount it, but they're thinking, ooh, in 6 months, if we hit these numbers, in 1 year, in 3 years, they're looking at larger time frames to run a whole company. So if it's down in any particular day, they're not as concerned. Now, for us, we're watching some stocks go through the roof, other ones go down. It's painful. But also, a lot of people aren't working right now. This is it. They're focused on it. Yeah. I would say it's probably any more news that doesn't tell them what the revenue is just kind of probably grating on people. That's my gut. Is that just tell us what the quarter looked like, what the numbers are. Then we can kind of extrapolate from there. And that, I would imagine, is coming any day.
You'd have to think. Man.
Yes. So I think we're hopefully going to reach out, catch up with them next week. I'm hoping.
Yes, yeah.
And in between then, I don't know when it's coming out. So I can't even give a hint as to when it's coming out. Other than we know it's supposed to be September. So it's got to be soon. That'll be the key yardstick. And I think just being in the markets long enough, you try to keep on pushing news and keep people informed when they're really just come on, give me the numbers. Tell me, I don't want to keep guessing anymore. What are they? Because once again, you get into this thing like with Desert Mountain with the model of, well, maybe it's this price, and then if this, and then that factor, and then maybe this and this. You could be talking about very different things with very different assumptions. So we need to have those numbers before anything. I think people will be a little bit, they're going to be antsy until that. And then you get the time factor again. So someone goes, I don't want to wait. I'm tired of waiting. Maybe I could deploy my money somewhere else for 3 or 4 weeks or a month or wherever. Sure. If that's your model, that's what you should do. But for us, we don't do that. As tempting as it might be, because we're a bit more patient. And I'm not saying that you're not patient, but it's just we've got a longer time frame. And it can become very easy. And I know just for me, because I can be affected by movements, either really excited or really down. If I react to news like that, where I'm tired of waiting for these earnings to come out, just knowing me, I would probably dump it. And then it's the next day they'd come out. It's like Murphy's Law. That would probably happen to me. And then I'd be like, oh my God, what did I just do? So I'm sure I've done that in the past. I'm almost positive, because I've learned enough to be I'm not going to get things on my time frame all the time. I might have a business plan. I want things to happen. This, and this. The one thing COVID event has taught us is that there are many factors well beyond, our control. People can't even go to restaurants now. You can't even go do stuff. So things are out of our control often, and we don't even realize it. But it doesn't mean you shouldn't have a plan, but you have to be flexible in it, and also kind of take a step back and go, why was I invested in this in the first place? Oh yeah, no, there is all this good news, and but you want to hear that one part, and that's what I think that's what people are waiting for. I don't know. You tell me what your thoughts are.
No, I'm right there with you. I do think that's kind of the trend that it's gone to, and we're fortunate that we're going to get to chat to Kurt next week, get the update from him. I know he was down in India for a few weeks, got their whole team together down there, really kind of laid out what the next few months and really the next kind of year is going to look like. So we'll get some news from him on where that's going. But yeah, I think to say it's people are waiting for revenue is kind of isn't there something else? Not really at this point. People are kind of just waiting to see, all right, hey, you're checking all the boxes. You've done great deals with Times of India and Chatterbox. You've got access to this massive influencer network. You're building, I'm fairly certain I can confidently say it's the fastest growing channel in India right now
Yes.
is
Oh,
what they're
yes.
building.
Yes.
So it's kind of like, yep, they're checking the boxes. They've got the team in place, and that brings you comfort as well, knowing that this team has done this before, has had success with this exact model, with this exact blueprint. They know what they're doing, and having confidence in that team as well. It says, okay, I think those numbers are going to come out. They're going to back up kind of how we're feeling, everything they've done to this point.
Yeah.
And just having confidence in that team that they've done this before, they know what they're doing, and they've got the path forward figured out.
And often too, in times of chaos like we're facing, where people are talking about different bubbles and different markets, is that we're very hypersensitive, and we should be, to any news flow. Is that you're going to find those stocks that you think are harder to sell, are in illiquid markets than the major ones. And also there's like kind of herd mentality. You're safer. You're in theory safer in a Tesla and an Apple than somewhere else because the big funds are in it, and you think that they're going to support you because they can't exit. Like if you're a huge fund, you're not exiting billions and billions of dollars a day. If you do, believe me, the market knows. Yeah. Even if you do it in the most shady and craziest and interesting ways to try to get out of it. So people tend to go, let's get rid of that one. Let's get rid of that one. Let's move. So this is just what happens. But like you said, I think it's a matter of just, we need to get that revenue. Yeah. People then can be reminded of all of the amazing things they've done in the meantime. But as a business owner, so if you're running the company, you also have a bit of an idea that you can't report. Well, I know what these numbers look like. Like I can see it coming in, but until they can release it and report it, we're not privy to that. So you can guesstimate, well, they feel excited, and from their point of view, they're like, oh no, this is awesome, this is rock and roll, we're doing this, and these shows should, and they've got their own, once again, business models internally and growth models internally to go, we're on track, we're not on track. And it's that fine line between being promotional about a company and then sharing the excitement, where the management goes, no, we're confident in what we're doing. This is what we're allowed to say. This is what we put out in the release. There's a lot of stuff in there, legally speaking as well, that you have to be careful. And once again, that comes down to, do you trust management? And do you have confidence in their ability to do things when they're on and they're saying to you, we're very confident that we can do this and this? Then you either accept it and kind of read into that, or because they're saying, we have information you're not privy to, we're feeling strong, we're confident, we're moving forward, these shows are going to do this and this. And once again, it's the time frame. Maybe it happens right away, maybe it's 3 months from now, 6 months from now, but it's, again, it alleviates some stress when you go, I've invested in this entire company and project as an investment, a long-term investment, and I've looked to these experts, because I can't pretend to be an expert from MTV and from any other
Viacom,
VH1 or
Lionsgate film.
I'm not. Yeah. I'm good at recognizing people that have a lot of talent, that have had a lot of success, and them showing their vision. And you have to rely on that, and that's a part of our model too, is that you rely on that expertise, and then we'll see if they're hitting milestones, and that's our kind of checkbook. Are they hitting milestones that are within their control, and how are they reacting then if things aren't ideal? So I just thought it was a good, and it's an interesting conversation, because it kind of meshes that kind of philosophy. How do you invest? How do you look at things? But it also reiterates today, like when I tell people anything, especially if you're young, the most important thing you could do is turn off mainstream anything, pick up a book, go read a lot. There's a good reading list I can send you of actual history, look at actual numbers, look at actual data, go to actual like CDC, look at data, look at that. Don't look for someone else's opinion. I never asked someone to believe my opinion. Don't believe me. Go look, go check. I'll go tell you where to go look. But you need to do the research yourself, put in a little bit of effort. And so whenever when we kind of talk about things, you don't have to believe Andrew, or I'm not asking you to. Like, it's not my intention, but it's easy to go look and to verify. And you, at the end of the day, you should always go to the source of where that data comes from, and then think critically. Okay, what does this mean? Yeah. If you get it third party, fourth party, fifth party, and it's on CNBC, and Joy Reid is giving her opinion on something, or Shaquille O'Neal is telling you his opinion on COVID. It's completely irrelevant.
Yeah.
It's meaningless. If George Clooney or someone from Hollywood is giving their opinion on politics, it's absolutely meaningless. It means nothing to me.
If they
And
want to
nor
give
should
me
it mean anything
acting
to you.
advice, I'll take
Yeah.
that. But, yeah, exactly.
But unfortunately, we've moved into a world where those influencers, even though they have no background in studying or anything in that, are people are moving their opinions based on things that you're like, why? What? That makes no sense. But that's a whole other conversation. But it fits into that theme of even the most bizarre becomes reality. And we're living in that now. We're the most bizarre, devoid of science, devoid of actual data, devoid of reason, has become reality because it's been wished so and imagined so. So, you can't expect the markets not to be chaotic whenever you're living in a chaotic time.
No, exactly. And with the amount of uncertainty around, what countries are going to do as far as their current rollout plans. And I mean, even in Canada, right here at home, we've got an election on Monday. So, of course, there's going to be market uncertainty surrounding that as well. So the important thing, I think the key point from today is to have your model that you feel comfortable with, have your game plan figured out, and then you're able to ride through the chaotic times with a little bit more assurance and confidence that you've got the plan in place.
Why do I like this one? It just dropped. You go, wait a second. Yeah, actually, I did like that Robert guy. He seems very genuine, authentic. And they look at how they've done so far. It's just, you have to kind of take a step back, look at the whole thing again, or maybe then look, and even Robert said it, you got in at $1, it went up to 3 or 4. Yeah, maybe sell, maybe you're out. Like that's it. But that's all. It's fine. And you make it from a rational decision, and that's fine, and it's good. But for us, we view things longer term, and for us, it also alleviates a lot of the stress that comes.
Exactly.
But we love talking about this because it talks about how one views the world, how one views the day, and certainly what someone thinks is information, what's opinion, what's real, what's actual data, what's not data. All of these things have never been more crucial and critical than today, where there's so much misinformation purposely there to lead people astray, to worry about things that are not relevant, and shifting narratives constantly, where people are, they're trapped. They're trapped in fear a lot of times, and you're unable to access critical reasoning because you're not firing on all cylinders. So for us, take a step back. It's the weekend. I'm not getting outside because it's going to be a torrential downpour, but maybe it'll be a lot of soothing and relaxing and meditating to clear the mind and just let it go. And also to keep in mind that there's trouble brewing. So I'm not pretending like everything's rosy and gold. I mean, I don't think anyone's going to argue that I'm always like, hey, the markets are going to go up forever. I'm kind of Mr. Doom and Gloom often. And we need to be cognizant of that as well, which is why having certain companies doing certain things is critical, rather than, and I'd make the argument, than the entire portfolio theory of buying baskets of stock and this and that. I think that model is going to be in trouble here. I might get in trouble for saying that, but it's just once again, it's an investment theory conversation. Doesn't mean it's right or wrong. It's just, how do you view the markets? Anyways, like I said, we could talk about this forever.
We sure could. But no, it's important. Enjoy the weekend, reset your mind, kind of get back to normal. Like you said, if you got to stay inside because it's going to be cold all weekend, you got to do that. But take the time to kind of reset, refresh, get into Monday. We always say that on the Friday show. That's always kind of our game plan, is come back with a fresh head on Monday and get ready to tackle the issues of the day.
Excellent. Well, thanks, Austin. Enjoy your weekend.
Always a pleasure, Andrew. We'll chat to you next week.